This is 95.3 Business Now.
Welcome back, everyone. The Senate has passed a bill that will allow the Tinubu's administration to increase from 5% to 10% the size of the money printed by the central bank directly for the government. The practice known as Ways and Means has been quite controversial since the administration of President Muhammadu Buhari. Earlier this week, the opposition members of the Legislative House reportedly walked out of the chamber when the bill that increased the borrowing size to 10% was passed. Well, joining me to discuss this is Dr. Tiliwa Adebajo. He is the CEO at CFG Advisory. It's a Thankful Friday, sir. Good morning, and hope you had a great week so far.
Good morning.
All right, Dr. Tilewa, give me your first word on the legislation to increase the Ways and Means advances from 5% to 10%.
Well, it's a rather interesting development because there's still a lot of issues that are outstanding that have not been resolved. And the whole essence is the fact that the whole legislation you're talking about is Section 28 of the CBN Act. And Section 28 of the CBN Act is very specific in terms of limiting the amount of ways and means the government can engage in. So, but right now there's a problem because the Act says that you cannot securitize ways and means financing, and the government has gone ahead to securitize ways and means financing. So that's number one. Number two is that it says that whatever money the government borrows, the government has to pay it back within the same year. Clearly, the government has not been able to pay it back within the same year. And so if the government cannot pay back that money, then they cannot borrow more. So even if they increase the limits, then they cannot borrow any money because it has to pay back. So there's still a lot of things. So this law or this amendment to the Act just causes more confusion. There needs to be a comprehensive review of that CBN Act, and there needs to be more clarity because right now there is really no clarity. It just makes things worse. And even if they have to borrow any money now, it's based upon last year's revenues, which was only 9 trillion. So the only amount they can borrow now is 900 billion. And if they borrow 900 billion now, they have to pay it back at the end of the year. So that's the irony now. Everybody has his own criteria for printing money, and it's normally done during crisis, and you have to pay it back. So normally most countries will enact a new law depending on the situation. That's what happened during COVID or during the global financial crisis. So these things are done at times of crisis more than anything else. So at any point in time, a new law will be enacted to deal with the specific emergency or the specific situation. So there are not really any global standards. But for fiscal responsibility and fiscal discipline, we had that section in the CBN Act to determine and protect the limits to which government can borrow from the central bank.
But if you look at the current situation for Nigeria now, can the Nigerian government, based on its current fiscal balance sheet of revenue flow, debt servicing, growth and inflation trajectory, can it afford a bigger size of Ways and Means from the central bank?
We can't afford it, so there's no question about that. The Ways and Means financing should not have exceeded 1 trillion naira. Right now is at about 30 trillion naira. So we have gone 30 times over the prescribed limit. So that is really where the problem is. So that is really what we need to put into perspective. So not only can we not afford it, but we went 30 times over the prescribed limit.
Well, the Minister of Finance, Wale Edun, said back in June that the 7.3 trillion naira of the existing Ways and Means has been paid, back to the central bank. But the Senate is now giving the central bank the powers to print more money for the government. What do you make of that?
The Senate cannot give the central bank more powers to print money. And the 7 trillion, not everything was paid back. Some of it has been paid back. Maybe about 3 trillion of that has been paid back, but not everything paid back. So the Senate does not give the CBN powers to do things. There's a CBN Act which guides the central bank. And the problem to start with is that the CBN itself violated its own act by going over the limit 30 times. So that is the problem we're in right now, and that is the issue that we have to deal with. It's on the Ways and Means, it's not the solution. The solution is that we have to have a comprehensive review of that section of the CBN Act that deals with Ways and Means and extensively put in place remedial legislation, not just amendment of the limits.
All right, Dr. Tiliwa Adebajo, CEO of CFG Advisory, thank you so much for your time on the show. Do have a great day and enjoy your weekend, sir.
Thank you.
You're welcome, sir. Well, let's quickly head straight to Market Street and give you a brief of Thursday's trading day. We're starting first with equities, and the bears continue to dominate trading in the local bourse as sell pressures on MTN Nigeria dipped 5.0% on the market performance. As a result, the NGX all-share index dipped by 0.42%. Moving to other African frontier markets, the Egyptian exchange fell slightly by 0.06% to end its trading week in Cairo, while the Kenyan Securities Exchange Index lost 1.47%. Here in West Africa, the BRVM Regional Exchange in Abidjan reported a 0.28% decline, but the Ghana Stock Market Main Index posted a 2.43% advance on the day. Looking into Southern Africa, in the region, we've seen the Zimbabwe Stock Exchange, gaining 0.41% on its main index. The JSE, that's the Johannesburg Stock Exchange in South Africa, closed in the red, 1.08%. We're back on Broad Street, and we're looking at money markets. Overnight lending rates among commercial banks on Broad Street or in Nigeria contracted by 11 basis points to finish off at 25.7%. That's in the absence of any significant outflows from the financial system. Well, if we check fixed income, trading in the Treasury bill secondary market was negative yesterday as the average yield expanded by 14 basis points to 25.3%. Looking at bonds, activities in the FGN bond secondary markets turned bullish or positive as the average yield contracted or narrowed by 2 basis points to 19.5%. Very quickly, we look at foreign exchange and how's the local currency here doing in Nigeria. The Naira posted its strongest single day gain on the US dollar in the week on Thursday, up by a whopping 2.5% to 1,570 Naira. That's against the US dollar or the American greenback at the Nigerian Autonomous Foreign Exchange Market, and that's as tracked via the FMDQ Securities Exchange. Now we're heading straight to look at global commodity prices, where oil prices rose on Friday but were set for a fourth weekly decline as signs of disappointing global fuel demand growth outweighed fears of supply. Brent crude futures gained 33 cents or 0.4% to $79.85 a barrel, while after falling 1.5% in the previous session, while the US West Texas Intermediate crude futures rose 38 cents or 0.5% to $76.69 a barrel. That was after a 2.1% drop on Thursday. On a weekly basis, Brent futures are on track to fall 1.7%, while the WTI, that's the West Texas Intermediate futures, are set to drop 1.1%. The 4 weeks of declines are set to be the longest losing streak for both benchmarks since a 7-week streak of weekly losses that ended early in December. Well, that's the package of the show for today, the 2nd of August. The Business Now will be back on Monday at 8:30 in the morning. Don't miss it. I am Aramide Falansho. Enjoy your weekend, everyone. It's bye for now.
This is 95.3 Business Now.